FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to and hopefully even watching the Financial Survival Network. I'm Kerry Lutz, and today is, well, it's the last day of August 2020. Things are getting crazier than ever, and we'd like to get your opinion of the craziness. Please email us, kl@kerrylutz.com. Don't forget, we are giving away $1,000 worth of gold for free. You just have to enter the contest. The link to go to, and we'll put it in the show notes, is financialsurvivalnetwork.com/contest. Very catchy, I know, but all you have to do is guess what the price of gold will be on September 25th, 2020 at noontime, and in US dollars per ounce, and void where prohibited by law. People under 18, don't bother. And if you're outside the country and it's impossible to send you gold, we will send you money, and then you can go buy your own gold. And it reminded me, John, I got John Rubino here at dollarcollapse.com. John, remember George Carlin did a thing about contest, about disclaimers, and void where prohibited by law, employees, he went on for like 15 or 20 minutes with all of the disclosures. So we'll come up with a disclosure statement, disclaimer statement, and you'll be able to do it. But in the meantime, it's in honor of our 10th anniversary and a complete redo of financialsurvivalnetwork.com. So just go over there, financialsurvivalnetwork.com/contest, fill in the info. If you could fill out our survey, listener survey as well, that would really help us a lot, so we can get you the right things that you want to hear. Anyway, with that out of the way, John, well, first headline I think is a big one. Virus not as dangerous as thought. It's coming up all over Twitter. And basically what we're looking at, straight COVID deaths without comorbidities. Around 9,200 people have died so far. And obviously some of the people with comorbidities, if they hadn't come up against COVID, would still be alive. But so we basically shut down the entire US economy for 9,200 people to stop them from dying, and they died anyway.
Yeah, it is a good news, bad news thing, isn't it? On the one hand, this virus that we're all worried about is not nearly as dangerous as we thought. On the other hand, we basically put ourselves into a Great Depression unnecessarily. So, yeah, okay, and to go further into this, the bubble was always in search of a pin. And this was the pin, but it could have been a lot of other things. So we were still headed for a big financial crisis. This just accelerated the process. And now, probably related to the lockdown is all the civil unrest that we're seeing now. So, we are in deep trouble right now financially, and we got a really hard year ahead of us. No matter what now, even if they say, forget about the virus, it was no big deal, or they come out with, a cure for it or a vaccine or whatever to make the virus irrelevant, we still have a really tough 2021 ahead of us because of all the debt we took on, which was going to blow up in any event. So, good news on the vaccine front or on the cure front and things like, usually make the stock market pop. But I think we're at the point now where stocks are just so expensive that it's hard to see the news you're talking about with the virus rejuvenating the economy. So, we got problems regardless, but it is good news that it's not as dangerous and we aren't as at risk as we were.
I think rather than a pinprick, it was more like a grenade going off, and it popped every single bubble except the real estate bubble. John, do you understand that? It's counterintuitive. Is real estate just strictly dictated by interest rates and nothing else? Is that what it comes down to? There's nothing about demand or incomes or anything else. It's just how much you got to put down and how much you have to pay a month, and taxes don't matter, which are going to be going up way higher all over the place. None of that matters. I mean, it's just seems to go against the law of economics.
Yeah, it does make no sense, because in a normal recession, at best, house prices stop going up and sales drop dramatically. And in this recession, and this is worse than a recession, at least in the previous quarter, real estate sales have been going up wherever it's available. Whenever houses are available, they sell. There's not the supply that there used to be, but still, house prices are going up in some places dramatically, and you wouldn't expect that in this deeper recession. And yeah, interest rates are down a little bit, but mortgage rates aren't down that much. They're in the low threes right now, where they've been before. So I can't explain it other than the possibility that mortgage forbearance has allowed a lot of people to hold on to their houses longer than they would have given their employment situation and such, and that it's delayed this wave of sales that would have had to happen one way or another. Either people default on their mortgages, the bank takes the house back and then has to sell it, or people sell when they get into trouble. And that hasn't happened. But that still could happen. We still could see when when government help for mortgages runs out, which it is kind of now running out, right?
I think,
and people have to, yeah. So if people start defaulting on their mortgages right now, that would throw the housing market into reverse. But otherwise, I don't know. Except to say that we're in maybe the blow off top of this bubble where everything is going up, because equities are rising too, which is another thing that doesn't happen normally in a recession. A recession usually gives you an equities bear market to go along with the real estate bear market. So I don't know. After the fact, we will come up with some explanations for it. But right now, you've got all these conflicting indicators. The economy is tanking. People are being thrown out of work. Stocks are rising, bonds are rising. So and real estate is rising. So I have no idea, except to say that you should expect crazy stuff to happen when you borrow this much money. But this is counterintuitive what's going on right now, to say the least.
Hey. And the other sector that's really booming is RVs. Since the pandemic and since the global economic collapse, RV sales are booming. My friend was telling me, she's retired, but she was a great salesperson. This guy was begging her. He owned an RV lot in Florida, up in Martin County, begging her, St. Louis County, begging her to come work for him, and that she was going to make more money. He can't keep the RVs on the lot.
Well, that's a virus thing, because people want to be able to get away from what they perceive to be really close quarters. Say, if you live in a city or a closely packed suburb, that feels dangerous. But if you can hop in an RV and just take off, that's appealing. I think what most people are going to find that RVs are a pain in the butt. They are really complicated ways to live, because you're worse than a boat, because you're driving your house from one place to another, but you don't have, you're not driving your sewer system or anything from one place to another, your water system. You have to find a place to hook all that stuff up wherever you go. And it's not simple, and it's not cheap. And, the gas mileage on an RV is single digits. So it's a bad idea, but I understand the impulse to get something that's mobile that lets you stay ahead of the chaos. So that's, by the way, my wife has an RV that she's cleaning up for sale. I'm bugging her to do it, to get it on the market right away, because
yeah, hey, you'll make
got to strike while the iron is hot now. Yeah.
Hey, well, all I got to say is, if Dr. Fauci was running the response to the plague during the Middle Ages, probably all of Europe would have been burnt down and would have been cinders, because he sort of just said, well, we need to destroy every city, burn it out if there's one case of the plague. Can you imagine this guy? I mean, his response to pandemics, God knows, man, they would have run out of leeches in the Middle Ages if that guy was running the show.
And now, from, well, at least from the Democrats, but you hear it kind of across the spectrum is, oh, we've got to trust the science, and just do what the scientists tell us because that's the best information. But they have had no idea from the beginning of this thing. We've gotten, what, 5 different stories out of the science so far, and it's still changing. It's still fluid, so I don't know what we're supposed to trust if this thing has changed so many times in just how long has this been going on? Just 7 months, right? Or 6 months?
Since February kind of started. Yeah. I can tell you who to trust. Financial Survival Network. We were right on everything, John. When I said it wasn't the plague, you're right. I was wrong about, I thought it would be over, honestly, in May or June. And it might well have been over, except for we had to flatten the curve, which spread it out longer. But there's a seasonal aspect to this thing. It's lost its virulence, less people in ERs all over the country. I'm 3 months off, but I knew it was going to happen, and I knew the death toll was greatly bloated, 2.2 million. They were lying then, and they're lying about 163,000 because we saw right away they knocked 4,000 or 5,000, the CDC, off of that number because they died either from intentional, meaning murder, or unintentional accidents, poisoning, all this. They were all included in the COVID numbers. You can't believe the numbers. Certainly, you can't believe the number of cases. Nothing you can believe anything that the government has done here. So believe the Financial Survival Network. Hey, so we got a video of Warren Buffett being totally confused by negative interest rates. And this is the Wizard of Omaha. How can he not get it?
Yeah, this is from a June interview with CNBC where the interviewer says, you run a big insurance company. Berkshire Hathaway, his investment company, is an insurance company at heart. And you take in premiums, then you invest those premiums in fixed income assets in order to pay off the claims when the claims come due. So how do you do that in negative interest rates? And he was just, he looked like Joe Biden, frankly, and sounded like Joe Biden, just a confused old man trying to make sense of a world that is changing out from under him.
That he can't change with. Well, he should have said, that's why I bought Barrick.
Yeah. Well, okay. Well, see, that's the end point of the story. He clearly is unprepared for something like negative interest rates because he's built a phenomenal career. And, the guy has been absolutely brilliant at picking which companies are going to generate strong cash flow going forward. But it was in an era of, just one big credit bubble from 1970s on, which tended to lift all boats and made his style of investing. He's still an absolute super genius at picking companies with good business models. But still, he was in an environment that was favorable for his strategy. And now that environment is changing. Negative interest rates throw everything into chaos, at least his investment strategy. And what do you do? Historically, when the world is getting more and more chaotic and you understand it less and less, you hide out in precious metals. So he's making the decision by buying Barrick, and he'll probably, you would think, buy more gold miners going forward because they're going to generate good cash flow demonstrably and going forward. But he's behaving the way the public has always behaved in the face of financial chaos. Everybody just piles into precious metals. And so he's doing the same thing, which is to his credit. He's looking for relatively predictable cash flow, and he's finding it in the gold mining sector. And you know what? When Warren Buffett makes that move, then that's kind of the last man standing of the anti-gold contingent, because he's always been dismissive of precious metals. And now for him to get into it. But this video kind of explains why he's doing it. He is truly baffled by what's happening. And
the club, I mean, who can negative interest rates undermine, destroy the whole return on investment, fixed income field, because they don't work when you have negative rates. But anyways, hey, well, we do have another interesting bit of gold news on the ticker here, the Ohio Police and Firefighter Pension Fund is going to allocate 5% to gold. Now, we don't know how they're going to do that, if it's going to be physical, ETFs, or whatever, but at least they're aware that something's got to be done here.
5%, Kerry. That is a huge number for the mainstream investing community, because right now, less than 1% of global investable capital is in precious metals. So, and prices are where they are. So imagine if you get a quadrupling or a quintupling of the amount of money flowing into precious metals. There literally wouldn't be enough gold and silver to satisfy that demand if it flows into physical. And the mining stocks are, as a group, thinly traded, fairly low market cap stocks. I think if you added up all the gold mining stocks in the world right now, and silver mining stocks, and totaled up their market capitalization, it would be far less than one of the FANG stocks. Oh, yeah. Any one of them, it would be less than Facebook, for instance. So, the amount of money that could flow into precious metals just dwarfs the room for that money to occupy. So you would see some pretty spectacular moves, followed by some kind of shutdowns in supply. You can issue as many new shares as you want to if you're a gold mining stock. So the supply of gold mining equities will not go down, or will not dry up. But the amount of physical metal will just shut down at some point. Already we've had shutdowns of the supply of silver eagles, for instance. And that was in a not too crazy market where the vast majority of people were not buying precious metals. But a lot of big institutions, like the Ohio Pension Fund that you're talking about, get this idea that precious metals are worth adding to their list. And then, it's not clear how it happens. It's not clear if they want to own bullion in a vault somewhere. Yeah. It's not clear where that bullion comes from, because you would have to clean out all the big central banks of the world, all their monetary gold reserves, in order to satisfy that kind of demand. So, yeah, it's good for precious metals. It's spectacular for the mining stocks. So we'll see if it spreads. But you've got Warren Buffett on the one hand doing it, and now you've got a big pension fund doing it.
And remember, back in like 2010 or 11, University of Texas Endowment said they were buying gold. So that marked kind of, well, I don't know if that was the end of it or what, but that was a significant event. And this could just be the start of it here, because if you look at what's going on here, we're far worse off than we were in 08 and 09, and nothing is, no real bright spots on the horizon, although there are a couple of interesting things that potentially can change things around, at least in the United States. Hey, so we see the mall apocalypse, the retail apocalypse, not just moving forward, but picking up strength. But then the largest mall operator in the country, Simon Malls, there's a lot of high-end malls there, a lot of outlet malls. Everybody who goes to a mall, if you still do, you know who Simon is. And they are buying up the busted retailers like Brooks Brothers. They're trying to buy J.C. Penney, because basically, if they can just get these things to break even, at least they'll get their rent paid on their centers, because they have clauses in their leases that say if occupancy dips below a certain amount, many of them do anyway, that the rent goes down for the remaining tenants. And really, they got nothing to lose here by doing this. They can kind of offset what they're owed.
Well, it's an interesting strategy, because presumably they're getting these busted retailers for pennies on the dollar. So it really depends on what they have to pay, right? Because those things, they do have some objective value. But if they pay too much, it's a bad deal. If they get it for much less than the intrinsic value of these things, then it's a good deal. But it's an interesting strategy, because, like you said, it allows them to keep their malls full with tenants that are paying cash or paying the rent, and delays the inevitable reckoning. But I don't think it prevents it. I think the concept of shopping malls is yesterday's news. because you really don't have to go to the mall for a lot of the things that you can buy online now. So I think the bigger trend is that Amazon is coming in and converting a lot of malls to warehouse space. That's probably, it's a parallel trend, but it's probably the bigger of the two trends. And most just flat out shopping malls with department stores in them don't have a very good future, which is, good in some ways and terrible if you work in that industry.
Yeah, well, we were overstored in the country, had way too many malls. There was a time that it worked, but again, the pandemic has shown that you can buy anything online virtually and not have to deal with any of it. The other interesting thing about that is that once Simon owns like a J.C. Penney, all right, we're going to close all the J.C. Penney's except the ones that are in our centers. So it gives them a chance to really stick the knife into their competitors and really maybe they know something about retailing that that the operators of the retailers don't know, and maybe they have a way to turn things around, or maybe they can just keep it going long enough till the trend perhaps reverses. As malls became the social center of a lot of communities. Now that they're gone, where are they going to go to? The Starbucks? I'm not sure. Maybe malls did play a kind of underrated, really function that we're going to miss. And maybe they revamp the stores and the retail so that it's more restaurant, entertainment centers, indoor amusement parks. I don't know the answer. Maybe Simon will figure it out. Hey, so last one is the robo-apocalypse, huh?
A big thing did happen in the realm of artificial intelligence just lately, where they had a mock dogfight between a Top Gun fighter pilot and I guess it was a drone that was flown by an AI. The drone won. That's a very big deal for the future of warfare, and maybe the future of humanity. If our weaponry is now going to be controlled not by drone pilots, not by humans, but by AIs that are integrated into the drone or the missile or the battleship or whatever, then that's a whole different world, right? And it's a very scary one because eventually machines might become sentient. If they get smart enough, there might be emergent self-knowledge in a complex enough artificial brain. And if all of our weapons are run by AIs, then you get the kind of Skynet thing, you get the Terminator scenario. So this is, well, it's far enough down the road that we probably don't have to worry about it today. But once we do the monetary reset and go back to having a fairly sustainable, manageable economy, then we might have this new problem where our weapons are not our friends anymore.
You know what I'm thinking? I'm thinking like the next Top Gun 3. Tom Cruise is going to be fighting AI and a drone, and maybe multiple drones coming at him, controlled by AI. And this could be really bad. Tom Cruise could lose that next fight.
Oh, yeah.
Then we wouldn't have any more Top Guns. Maybe that's a good thing.
Here, there's actually a movie. It's a lower budget movie, but a movie in which an AI controlled fighter plane is the villain, and human pilots have to fly up and chase it and fight it and everything. So that's science fiction writers have thought of all this stuff. I don't think there's a machine intelligence or first contact with aliens scenario that hasn't shown up in some science fiction movie or some book already, So we've thought this through, but now we're seeing it actually happen. And since the vast majority of the science fiction scenarios are not favorable for humans, when AI emerges, but some of them are. So hopefully it's one of the favorable scenarios, but yet another thing to worry about. I kind of have trouble thinking about things that are more than 3 or 4 years out because there are so many huge problems. that are right here staring us in the face. So this is one for the future, but it's a real one.
What about, John, AI stock traders, like real AI hooked up to some kind of major quantum supercomputer? It's
Mm-hmm.
it's able to beat everybody in the market except other AIs, where it's kind of like chess, where the computer will beat the grandmaster or the international grandmaster, but the only thing it can't beat is another computer. So we'll have an AI arms race in the market, right? Because once you take all the data all the trading data, it's all out there that ever existed, and you feed it into one of these things, it should become a master trader able to beat anybody.
Well, most stock trading is done by algorithms now already. And if you go online and play poker, for instance, a lot of your opponents are bots. In other words, algorithms that play poker against you. So this stuff is already happening, and they're getting better and better, the bots are.
Yeah. Yeah,
And
it's going to become a bot world here.
yeah, I mean, they'll continue to get better and better. And then the question is, okay, that's weird, but manageable. But the question becomes at some point, what if they wake up, these bots that are smarter than us at poker and smarter than us at stock trading and chess? What if they realize that they're smarter than us? That's the singularity, I guess. Yeah.
Yeah, we're talking Skynet.
Yeah.
Skynet. Well, they aren't going to be smarter than gold and silver. That I don't think. They're not going to be able to do it. By the way, gold's up again. We're at 1970. It's going up towards that $2,000 resistance point. There's been 3 major raids today to drive it down, and it's still going up. Using the analogy, John, where if the Federal Reserve takes its foot off the accelerator pedal, the monetary acceleration pedal, the stock market immediately collapses. And if they take their foot off the neck of the gold market, stop trying to suppress it, it immediately goes up. It's kind of like parallel markets, the antithesis. One is the antithesis of the other. I just find that pattern really interesting.
Well, it is all part of a plan, apparently. It's government policy to make the stock market go up, and it's government policy to suppress competing forms of money. So it shouldn't be a surprise that some of the newly created currency going into the banking system goes into stocks, and some of it goes into, for instance, short futures contracts on gold, which are used to suppress the price. So these are things that aren't sustainable because they only work as long as the currency stays valuable. So as soon as the value of the dollar starts to fall in a noticeable and sustainable way, then these games end. And so that's when gold really takes off. But already it's a nice run. I'll take this, and silver is up more than gold today, which is the way you would expect the later stages of a precious metals bull market to play out. So, we're nowhere near the end yet, but we're moving into the stage where silver outperforms gold, which means there's enthusiasm out there for safe haven assets, because, people buy gold when they're scared, and they move into silver when they're excited by what they saw happen in gold just lately, because the silver is more volatile and it's easier to buy.
Yes.
So we're there now, but short of $100 an ounce silver, there's no reason to think this ends. And even at $100 an ounce, it will still be fundamentally overvalued. Or undervalued. It'll just be that it's had a nice run, and maybe it's time to take some profits. But before that, there's no reason to be selling your silver eagles or anything. They've still got a long way to go.
Okay, once it breaks 30, then 35, then 40, then 50, it will see its record. And it's going to happen sooner rather than later. Can't tell you the exact time. I wish I could, but no question that's coming. In any event, go check out John's site, which is dollarcollapse.com, financialsurvivalnetwork.com/contest. Enter the free $1,000 gold giveaway. Hopefully you'll all enter, and we'll have the drawing. And John, we will pick up with you next week.
Okay, see you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.